This is Scott Becker with a special edition of the Becker's Healthcare Podcast and the Becker Private Equity and Business Minute Podcast. We get a chance today to visit with Kristen McDermott Woodrum. Kristen's a brilliant partner in digital health and healthcare at McGuireWoods. She's going to talk about some of the trends she's watching in healthcare currently, and some of those trends come out of a recent McGuireWoods Healthcare Private Equity event, and some of the speakers and some of the thinkers there. She's got brilliant perspectives on what she saw and what people are talking about. So welcome, Kristen, welcome. And take a moment and introduce yourself if you don't mind, and tell us what you're watching currently in sort of the healthcare, digital health, healthcare world.
Oh, thank you, Scott. And it's a pleasure to be here with you today. I spent last week in Chicago and attended the McGuireWoods 19th Annual Healthcare Private Equity and Finance Conference, which was pretty incredible. So I've been thinking through some of my takeaways from that conference and some of the perspectives I got from the various panelists and people I talked with, including private equity investors, lenders, investment bankers, C-suite executives, and other advisors in healthcare. So definitely seeing some challenges right now. One of the focuses obviously is on the increased interest rates and what impact they're having. In 2022, we still had a really good year for transactions. It wasn't the super hot volume of 2021, but based on data from PitchBook and others, it was the second highest year on record. It started really strong, but then the volume began to cool. And now lenders are taking a closer look at deals and the quality of borrowers. Given the cost of capital, investors are also being more cautious. All around, there's more scrutiny on the financials. We're seeing less likely to see pro forma adjustments that would support inflated purchase prices. The investment bankers are still exuding confidence, which is their job. We're definitely poised for a lot of add-on transactions and seeing continued volume there. There's a lot of uncertainty and some speculation as to whether sellers may take a pause before entering the market. And there's continued uncertainty, especially this week with the Federal Reserve Chairman telling the Senate Banking Committee that rate increases may need to be higher and quicker than previously expected. And also, I think we'll see a lot of eyes on the jobs report released later this week to see what sort of impact that will have for 2023.
Chris, I mean, just to summarize there, a rate rising environment causes buyers to be more cautious because the borrowing costs are so much higher. It causes sellers to be cautious. Are they selling into a lower multiple market than they were? And so it does put a little bit of a slowdown in the market. There's still lots of bolt-on transactions, but concern about big platform transactions. Thank you. Talk about, you were mentioning labor. Why don't you go to that subject, Kristen?
Sure. So labor was another challenge that came up a lot. Operators are faced with staffing pressures, probably not as acute as what we're seeing with the really big health systems, but labor costs are high and filling and retaining some positions is a challenge. Nursing, behavioral health, home care are some of the areas that are feeling the pinch right now. Investors are also looking forward at the diminishing pipeline, and some are targeting investments in specialties where they predict shortages in the future and buying up those physician targets. We've talked a lot about primary care. There are some specialties. I moderated a men's health panel, and it turns out the vast majority of urologists are men, which completely makes sense. But most medical students are women, so an imbalance there, which creates an opportunity and a challenge going forward, maybe some staffing changes.
This point, though, Kristen, is important not to be lost. There's quickly evolving shortages of doctors in both the primary care level. Big pharmacy chains are trying to buy those up, which is going to lead challenges for health systems. And then at the specialty level, big private equity funds are trying to consolidate those and buy those up. And that's also going to leave a lot of holes throughout the health system in terms of figuring out, where is coverage going to come from, who's going to control coverage, what that's going to mean. And somehow or another, to solve this, we've got to figure out how to mint more doctors at the end of the day. But in the meantime, there's tremendous competition over an increasingly shortage amount of physicians. It's almost like oil shortages, and people trying to corner that market. They're trying to corner the market on physicians now.
That's exactly right. And then obviously you see solutions with advanced practice practitioners and the entry of nurse practitioners and PAs kind of picking up some of that burden. There's a lot of investment in solutions too, digital health and tech-enabled solutions to help automate some of the medical record keeping or charting other mundane tasks to reduce the staffing, free up the physicians so that they can actually practice, and then to address the burnout and fatigue that healthcare providers are facing from dealing with the administrative burdens of the job. A lot of interest in that area. And despite all the challenges, the message was certainly not all doom and gloom. There's a lot of great opportunities out there, especially seeing interest and focus on some of those hot sectors, including behavioral health, cardiology, continued interest in women's health, and a lot of interest in value-based care. Some people are still on the sidelines, but they're definitely taking note and paying attention to what's happening in this transition from fee-for-service to value-based care, standing room only panels on that topic, along with the digital health and tech investments that enable this transition, whether it's decapitation or some form of alternative payment model. So that's exciting. To kick off the conference, I had the amazing opportunity to co-host our Digital Health Tech and Innovation Dinner with Andrea Lena and interview our keynote, Devin Cardy of Martin Ventures. And that was really a fascinating discussion. Martin Ventures has an investment thesis to invest in companies targeting 3 core areas of opportunity. One is to optimize existing healthcare providers, helping hospitals, physicians, nurses reduce costs, increase revenues, and gain efficiencies. Second, to innovate new models of care, which ensure that care is delivered consistently in the most clinically effective, cost-effective venue of care, which may be at home. And then third, to empower the consumer to be more informed and engaged in the control of their healthcare. And we talked through a number of their investments, a few examples: Trilliant Health, which is a data science and analytics company,